Hello, it's Candace, and in today's QuickBooks tips and tricks, I am going to answer some more questions about the balance sheet. So the last couple videos I've done have really been about the balance sheet. One was to understand it, and then the other one was about depreciation, accumulated depreciation, which the accumulated depreciation actually shows up on the balance sheet. So I received a couple questions through my email, and I wanted to answer those today as our tips and tricks. So the main question is, we would really like to understand the balance sheet and where do the figures come from, and do we choose what accounts show up on the balance sheet, and what are retained earnings, and what the figures. So let's start with one of these questions at a time. So let's actually go in, and I'm going to pull up the balance sheet, and we're going to start there. So if you go into reports, company and financial, balance sheet standard, the first question really was, where do the numbers come from? So let's go back to that and let's start over again. So today is September 30th. I can't believe it. It's the last day of the third quarter already. We're getting ready to start the fourth quarter tomorrow. So the first question is really, where do these numbers come from? And the answer is the chart of accounts. So the numbers on the balance sheet decides which numbers are going to show up based on the type of account they are. So in the previous video, I taught you that there are assets, liabilities, and equity. And under assets, those are things like current assets, fixed assets, bank accounts are those kinds of things, accounts receivable. And so inside of QuickBooks, anything that is considered an asset is going to show up on the balance sheet. Anything that's considered liabilities or equity. And I did this explained in the last video a little bit more about what each of those are. So basically, anything that's an asset, cash, anything you own, accounts receivable, your vehicles, that kind of stuff is all your assets. Your liabilities are, your credit cards, your sales tax, anything you owe is going to be under liabilities. And then your equity is your equity in your business. And that's where the question of the retained earnings comes into place. So one thing I want to clarify real quick is when you're setting up your balance sheet, if you are keeping track of QuickBooks for your business, you're only going to have your business things in here. So if you owe a loan personally, that's not going to show up on your business balance sheet. They're different. So you want to make sure that whatever you put into QuickBooks has to do with your business if you are tracking your business in QuickBooks. Now, if you're tracking your personal, that's a different thing. But I'm teaching you how to manage and grow your business with QuickBooks for your business specifically. So you want to have all your assets on there. If your business owns your building that you're in, owns any of your vehicles, then it would be in there. Now, if you personally own your vehicles and your business doesn't own them, then they would not be in your QuickBooks. Remember, the purpose of the balance sheet is really a snapshot at one moment of exactly what's happened in your business for lenders and that kind of thing. And it tracks your assets, liabilities, and equity. So if you owe on your credit card, you aren't going to see your credit card on your profit and loss. You're going to see the expenses you incurred to generate your credit card. So I hope that makes sense. The same is true with sales tax. Sales tax is not a business expense. It's something that you collect for the state that you owe the sales tax for. So that is a liability for you. And the same is true for like a loan. It's not going to show up on your profit and loss. It's actually going to show up on your balance sheet. So I hope that's really clear. Where those things come from is when you go under List, Chart of Accounts. Over here where it tells the type of account, QuickBooks automatically knows where those accounts belong, whether they belong on the profit and loss, which is only income and expenses, or if they show up on the balance sheet, which is your assets, liability, and owner's equity. All right, so I hope that's clear. The second part of the question, which was, where do the figures come from? They come from your chart of accounts. They come from whatever you've put into QuickBooks. Can you choose which accounts show up on your balance sheet? Yes and no. You can choose whether you pick cash or accrual basis. There's a couple other specialty customizations, but really where you're choosing what's going to show up on the balance sheet is based off of, if you go under List, Chart of Accounts, what you have included inside of QuickBooks, and whatever balance it shows here, or whatever balance is as of the date you pull it, is what's going to show up on the balance sheet. And then what are the retained earnings? Retained earnings, which are down here. So you have your equity and you have your net income. So your owner's equity is money you've put in as a business owner. You contributed to the business. Your retained earnings are any earnings that you've had from any previous years. And net income is anything in the current year. So let me show you an actual profit and loss. Reports, company and financial, profit and loss. So if you come down here and you check this year, this fiscal year to date, you'll notice 58.1930. If we pull that over here to the side, can you see the other one? Let's see if I can. Yeah, 58.1930. See that dollar amount's the same. So the net income is actually coming from your profit and loss for the period of time from the balance sheet knows from the beginning of the year to whatever date, whatever you've picked in your QuickBooks. And then retained earnings is anything you've had from the previous, all of the previous years that you've been putting into QuickBooks. So in this example, you'll notice the retained earnings right there is $1,730. Well, inside of this QuickBooks, I only had done a little, I had only wrote one expense out for 14 in this example. So it is saying that the profit and loss is actually a loss of $1,730 for the 2014 year. That's coming down here to retained earnings. Retained earnings are anything you've done in the entire time you've had QuickBooks. So if you've had QuickBooks for 6 years, if you pulled a profit and loss from the first date to the end of the previous year, you would see what your retained earnings are. That's where it comes from. So I hope that was clear. So really the balance sheet it's just another report that tracks what's going on within your business. What are your assets? What are your liabilities? And what's your equity? So how much value, so to speak, is in your business. I hope this has been beneficial for you. If you enjoyed this video, please share it. And if you have any other questions, please comment below. And I will see you guys next week. Don't forget to subscribe. Bye.